What do you see? Are we at a bottom? Can you buy this dip? I hate to ask you such a rudimentary question, but that really is the question.
It's absolutely well, first of all, thank you so much for having me on, and you sound well, so that's great. It is absolutely the question that all of our clients are asking, and while incremental news flow has been getting better, and hence markets are 20% off their lows and volatility has reduced, we do think it's probably too early to call the all clear here. So two things quickly that we know, and one thing we definitely don't know. So what we know is that, number one, investor positioning in equities is much lighter, which means that there's less panicked and forced selling ahead of us. So it's important to note that households were at their 92nd percentile of highest ownership at the peak of the market, and now that's down to the 34th percentile. So they've adjusted. And the CTAs, or the managed futures, have gone from net long to net short. And so that is one of the reasons vol has reduced, and we have less forced selling ahead of us. The second thing that we should know about equity markets is that they're in their bottom third of distribution in the low inflation regime since the early 90s. And they also look particularly attractive relative to bonds, as equity risk premiums only been exceeded 7% during that time. So that's the good news, and those are two things we know. The thing that we definitely don't know, and we have to have a lot of humility around, is that we have no idea how long this will last. And so taking all that together and concluding, our advice to clients right now remains very consistent. We want them to stay healthy, obviously, most importantly, stay calm, but also to stay invested. And that doesn't mean taking no action. Staying invested, on the contrary, but investors should also, number one, actively and gradually buy equities to rebalance to their strategic targets. And number two, we believe most passionately, this is an amazing time for active management, and use active managers that will help get your portfolio to the other side in better shape than market forces alone.
So if you're talking to one of your clients, what do you advocate that they're selling to then buy?
There are, in the overall asset allocation scheme, we would either be telling them to use some, if they have the risk tolerance and the long time horizon, to use cash to go into equities, or also parts of the fixed income market to sell that to rebalance into equities. So at the overall asset allocation level, that would be our advice. And then obviously within equities, to be highly selective, because there are some parts of the market that we think are challenged, but there's also tremendous opportunities out there now as well.